What are we going to talk about today? The NCAA championship game tonight. I have a chance. I have to decide whether or not to hedge betting Houston. That's number one. Number two, we're going to talk about the markets down again, but way off the lows. Headlines? You guys want headlines? This is a headline driven market, baby. Stephen Orr, Quasar Markets. He'll be joining us at 8:35. Talk about his site and what he's doing, folks. Strap on the seatbelt. It's going to be a wild ride today and for the entire week.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, let's go, guys. Down 122 handles, 49.88, under 5,000 in the S&P. The buck not getting hit too bad, down a few pennies, 102.73. TLT hanging in there above, only down 23 cents, 92.62. USO down again, 254, 65.38. But is that deflationary? Maybe. GLD and silver, SLV, going the opposite way. GLD down 53 cents, 279.19. Silver, that's up 35 cents, 27.43. And not participating on the downside and more. Bitcoin futures, they're down $7,625. Let me remove my charts here for a second. Triple D will be coming on the stage. And Dennis, why do I feel like the market is up so much?
Because we're way off the lows. And also, you get these FINRA prints coming in here at 8 o'clock, and it feels like the market just crashed back down. But don't worry, folks. It's not a Trump headline. It did not just crash back down. If your S&P SPY charts or everything are going nuts right now, it's not because of that. It is the 8 o'clock FINRA print dump from last night. So this is where you're looking like 484 on SPY right now. That's where it was last night. I can promise you it is not there right now. It is 493.50 bid. So we are actually over 10 points off the SPY lows. But the stupid 8 p.m. FINRA dump screws up all of our charts.
Oh my gosh, we should buy. Just buy.
Yeah, I know. Buy, but you can't buy those prices. These are old prices, folks. So if you're looking at the tape right now and it says SPY down 5%, 481, what is that? Oh my gosh, what did Trump just say? No, none of that is occurring. All prints from 6 p.m., from basically 8 p.m. last night to 4 a.m. last night. The Robinhood and the IB and the TO, I think Thinkorswim does it. All the FINRA 8 a.m. tape dumps are happening right now. They are just so stupid that they do it all at the same time, but they've got to be on the tape because it's rules, SEC regulation, all the trades up to hit the tape. So they just dump them all on at the same time, the ones from last night, which is brutal. But we are back. I think the tape dump is over now. SPY is back to its 493.29. So no, you could not just buy that at 481 and flip it out at 493. Again, those trades happened last night. But let's recap what happened last night because
we had some fun. Did we have some fun?
We did.
Have some fun last night?
We did.
Holy mackerel. All right, go ahead. Go with the recap.
Yeah, so we opened 6 p.m., obviously on the futures, and we opened and we tanked and we dumped. And you can see it on Joel's chart there. We dumped, and then we pop back up, and then we dumped again overnight, and then we pop back up here overnight. So we've been chopping around a lot. Over the weekend, if you were, enjoying some sun or wherever you are, we had a little bit of sun here, even though it's very cold still up here in Georgian Bay. If you've been away, though, and weren't paying attention to the markets, couple main headlines to talk about. The EU is planning $28 billion of retaliatory tariffs. That was a headline that broke. But then there's Italy saying, well, it might be, they might be the wait and see game. Some of these other, Germany may not be, right away. So it's wishy-washy on what's coming out over from Europe. What is coming out from the administration, though, is we had Navarro, Lutnick, there's commentary coming out, obviously, because these people are on financial media sites more often than not, it seems like. It sounds like out of this administration, the administration is comfortable right now. that there doesn't sound like any Trump put to be had, meaning it doesn't sound like the Trump really cares that the market is dumping this much right now. And that has spooked the overall market because a lot of people assumed that the stock market fell far enough that Trump would come in and rescue the stock market. That kind of went off the table, Joel, on Friday, actually, afternoon, when Trump, and I think it was Friday, when Trump retweeted a video. Somebody had made a video on TikTok showing that Trump is a genius. He's crashing the market on purpose so that the Fed has to lower rates. The video was kind of dumb, but Trump retweeted it. He's retweeted on his own social media platform. So then it's like, holy cow, now he's got it in his head that yeah, this is the way we're going to do it. This is the way we're going to break the Fed is by crashing the stock market. And I'm like, holy, if Trump has that Trump put is officially dead. And that's a major problem for stock markets. With all that being said, we are down 15% in 3 days, basically, when we were at the lows last night. Now it's like 12 or 13 because we bounced off those lows. We are massively, epically oversold. So I think, any type of headline that, is positive is going to pop this market like it could pop 100 points in like 100 seconds. It could be that fast. So I got to think there's maybe some positive headlines coming eventually. Maybe, some concessions or deals, really like talking deals like that Vietnam deal. Remember Lululemon popped up on Friday?
Yeah.
That potential. I think there's potential for talks of deals, and that could be a catalyst to pop the market. But right now, your individual stock stories don't matter at all. It's all about the macro tape. It is all about Trump.
Well said. Well said. And I mean, you talk about capitulation. We were talking about it last week, and I mean, I just didn't feel it in my bones, and I don't even know if I'm comfortable saying that the low of the move is in. I mean, I've been, looking at the charts, which become less and less relevant at this time, and until otherwise notified. I mean, this 4450 level. I mean, I'm going to measure it from the futures because the futures are supposed to predict the future. And boy, oh boy, going from that COVID low of 2650 up to that 6230 high, halfway back we've seen it. And I remember during COVID when we came back down, I'm like, are we ever going to retrace 50%? Are we ever gonna get half of that move back? Well, we did, and then some. So if you had your own methods of technical analysis or whatever you use, stick with them. But there you go. That's what the chart looks like. And if you look at from the COVID low, it doesn't look. I mean, that's a couple big red fat candles there. But
Yeah.
man, oh man, there's a lot of great underneath that. Let's just talk. We've talked a lot of bearishness, and obviously it's being coming out in the market, but some deflationary things are going on, right? Crude oil's coming down, right? That should
Oh,
help
yeah.
inflation. Um, our portfolios are coming down,
Oh,
right?
yeah.
Getting rid of some excess wealth, right?
Oh,
You
yeah.
got to take that into account. Um, and this is not a knock on Bitcoin or whatever, but just think about all the excess money that was created in an asset that makes the move that it had. So a lot of inflationary pressures, boom, they could be discounted a little bit, but then the tariffs and the future impact. I think that there are some other positives, and there are a lot of other people on Wall Street that were on the bandwagon are kind of like getting bumps and bruises hopping off the bandwagon. I don't think that the administration really cares. But that's where we're at, and we're losing. I can't believe You're right, Dennis. That pop over 5,000 to 50-40. Man, we're just moving in 10, 20-point clips. But
Yeah. It's thin. The markets have gotten thinner too. So this is a market structure issue as well. And this is not just market structure. This has always been the case, back 100 years ago. When volatility goes up, market makers widen out. So you're seeing moves, like violent little swings all the time. Why is it so? Well, the VIX is elevated. Market makers got to move out because they can't be trying to pick up nickels. They need to be picking up quarters or more here right now to make up for the risk of getting picked off by other algos. So it's just wider markets right now. Volatility is up. That's going to be here for a while. But again, just going back, we're in a headline-driven market. Headlines are what matters. So keep an eye on Trump's social media accounts here. Keep an eye on the major media because, you got to be watching Twitter and different places as well because you just get, just a taste of like, oh, potential for a deal will be popping up. Potential for more retaliatory tariffs, we're going to be going down. That's the two things that really matter right now that the algos are zeroing into is potential for deals up, more retaliatory tariffs down. White House also like standing and being strong and say we don't have any problem with this market going down at all. That's bad for the markets too. So if you're trading, pay attention to all of those things.
I just want to bring one other thing to the stage here, then we can obviously get to some individual issues. On the Stock Trader Network, I've had a guest on a few times, Helene Meisler, who
Yep.
writes for Yep. And she showed some charts here last week. Let me bring this up here. And she was talking about the different cycles that we're in, the sentiment cycle. And, she's looking at the pattern. And a further decline on Monday would have me thinking we're at panic. Okay. Panics are sharp and last longer than a day or so. But, what she's saying is this: is this the capitulation? Is this it? And as long as we hold that low at 48.32, 130 handles away, we could call that move last night the capitulation. But man, it just doesn't feel like it yet. It's a
I
ways away, but whew, that was one heck of a move last
I
night.
think Blue Putnam might have said it best on STN on Wednesday. We had Blue on, obviously our boy Blue, economist, knows a lot more about the economy than we do. I actually did retweet his commentary as well, but Blue is excellent. So we had him in the STN room. And he said that if these tariffs stay, if what, has been proposed sticks, and sticks for a long time, he said the QQQs are going a lot lower. And he knows the economy, knows what the kind of damage has been done here if these tariffs do stay. And that's what his comments were. And this was Wednesday afternoon. What a call by him, or maybe it's Thursday afternoon. Maybe I get my days mixed
It
up
was
here.
Thursday. It was
Thursday
Thursday.
afternoon. Sorry, it was Thursday afternoon. But what a call by him because the Qs were sitting up there around 450 when he said that. We've dropped another 10% in 2 days. So Blue, you're my boy, Blue. That was a fantastic call if you're listening. We just look at this and it's just the repercussions of this. We have no idea. They're talking about, the iPhone costs, going up tremendously. Like costs of, producing stuff is going to go up tremendously if you're importing those parts to come in. So in the short run, all these companies are going to make a hell of a lot less money. And that's what's getting priced in here. In the long run, 4 years from now, can we build in factories? Dan Ives is of the other opinion. Dan Ives thinks even if you come over here, he's like, do you want to pay? Dan Ives came out with a report. Dan Ives is a pretty smart guy. Tied with Tim Cook, he knows Apple pretty well. He said, if these tariffs stick and we start producing, and we bring all these factories and start producing iPhones over in the US, that your iPhone is going to go from a cost of $1,000 to $3,500. That's where it's going to go. That's just the math. He wrote the whole piece. It was excellent. I encourage anybody to read up, on Dan Ives. He's scared, but Dan Ives is still staying in the bull camp because he thinks Trump will bend. He thinks that these tariffs will not stick. So that's why he's still staying in the bull camp with his overweights, and that's a possibility. If all of a sudden Trump starts to teeter or bend, or other people in this administration starts to break, we rip, man. And I mean we rip like you've never seen us rip before. So that's the risk to the bear thesis here, is that these tariffs, if they don't stay, this is all just gone in a flash, like almost like COVID, like the crisis is over and the stocks could come right back. But if they do stick, I believe what Ives is saying. I believe what, Blue was saying. They know a lot more about the businesses than I do. I'm just a stock trader. But when they're saying stuff like that, it makes me hope that, at least these tariffs may, I hope they don't stick around for 4 years.
Well, I mean, I think that the biggest flaw in this entire thesis is the cost of construction right now and to build these
Oh my
plants and how
God,
long it
Joel,
takes to do it.
they're killing
And
people.
then finding people to do it. So you're asking U.S. companies they're going to be making less money to
Hmm.
spend more money to
Hmm.
build these factories.
Hmm.
Then once the factory's built, if they're ever built, right? We have to, how long does that take? I mean, does an architect whip up
Forever.
plans in 28
So long.
seconds?
Three
Yeah,
and a half to 4 years.
yeah, yep, yep.
I mean, you've got
To
Audi and I believe another automaker holding cars from at port here so that they're not going to go through so that they don't have to get tariffed. So they're like playing the waiting game here and hoping that these tariffs aren't going to stick. So they're like waiting here, like they're going to send them over and now they're waiting. There's companies that are banking here that Trump's going to bend and there's going to be some deals to be had and a lot of these tariffs aren't going to go through. So that's the two scenarios that Trump doesn't bend. Stock market, according to Blue, Dan Ives probably goes a hell of a lot lower. Trump bends, starts making deals. The art of the deal, Christian Fromhertz believes the art of the deal too. If we get some deals, stock market goes a lot higher. I'll tell you right now, though, the stock market is not going to be where it is
stock
a
market
month from
doesn't
now.
believe anything. The stock market doesn't believe anything that's going on, and we've talked about a
It
couple
doesn't
things. We
know.
talk about uncertainty. Boy, we couldn't have more uncertainty right now in the markets. Or a lot of people that were on his bandwagon, as I said, are jumping off. And just going back to Blue, we had Blue on a couple months ago, and he was worried about a recession. And that was even before the tariffs. Not only are the tariffs inflationary, but you're cutting spending and you're cutting out jobs. I mean, stagflation, depression. I mean, I don't know what you want to call it. I mean that the handwriting's on the wall for the markets, I think. And I mean, how low can you go? I mean, can we go back to the COVID lows? Is that a possibility? S&P under 3,000? I
No,
mean,
we're starting to put the cart before the horse here. So I do believe at a certain point in time there'd be pressure on this administration. I do believe a Trump put still exists. So I'm not in this camp that there's no Trump put and the market crashes 30, 40, 50%. Trump doesn't just sticks to his game. I don't believe that whatsoever. I think there's pressure inside the administration as well. You can even see Elon Musk teetering here now over the weekend. Musk has been rah, rah, rah. Musk came out with a video on the weekend talking that he thinks free trade is better for everyone. I'm like, holy crap, you're going to get yourself really not just kicked out of the White House here, Musk. You're going to get banned from the White House with that commentary. But I mean, you can see cracks forming here. Cracks are good for the stock market here, folks, because if they don't form, then we're going to go a hell of a lot lower, according to Blue and Dan Ives. So I do believe that there will be some deals here. I think there's going to be some deals. I am not in the camp of 3,000 S&P. So get that out of your heads right now. I don't think there's any chance we're going back to 3,000 S&P. I don't think so. Unless this sparks a whole financial crisis and there's all kinds of other stuff. I mean, you can never say never about anything. So I guess there's always a chance,
yeah.
but I think getting so, bearish here that we're selling everything, we're going straight down is like selling everything at the COVID lows as well. So I think there's going to be deals made. I think these tariffs are going to end up being a lot less than what is proposed. I believe there's going to be tariffs. I believe it's going to be a lot less than what's proposed here. That's where I'm at. That's my head. I may be wrong. I'm not an economist, but I am a stock trader. And I've given you the two scenarios. If he sticks to these tariffs, market's a lot lower. If he starts getting deals and we start to see the tariffs rates come down, market goes higher.
Okay, let's go back to Tesla here real quick, and it's below the Howard Lutnick put. He said that this stock would never go this low. So and that's the other thing too. The administration talking about stock prices. I mean, come on.
That's ridiculous. Did Lutnick say that again?
Yeah.
He's sitting here cheerleading stocks. Some stuff's gotta stop here. I again, Trump, Biden, whoever you voted for, or Kamala, you obviously couldn't vote for Biden, but I'm just saying some stuff's just gotta stop. The blatant, cheerleading of companies who have helped this administration seems absolutely ridiculous to me. And I've been a Tesla bull. I still own some shares. But, I obviously got off the bandwagon. I'm like barely any shares left. I would at some point in time rebuy Tesla if I start to see things start to make sense. But I mean, this blatant going out there, Letnick's done this a few times. Go out there, buy Tesla right now. What's happening here? Have you ever seen somebody in a situation of power like Letnick have blatantly, publicly cheerleading stocks on? What is that? Like, what is that? I think that just needs to stop. That just makes him look like he's got an agenda. That makes him look like he's not in the best interest of the American people, but in the interest of the people who donated to the campaign. That's terrible for him to be up there just cheerleading Tesla. It looks corrupt. It does.
We are 15 points below the prior low of the move. That just will give you some technicals, some numbers. Like we said, you guys have your charts, and you guys can do your own stuff. But 236 was your low. Oh no, that was even last month's low. 236 even was your low on Friday, and then we did get lower. 217.02. So on a relative strength basis, and I'm saying this really tongue in cheek here, Tesla's holding up okay compared to the S&Ps, right? I
Kind
mean,
of.
it kind of.
Kind
But
of.
it did get much lower. I mean, the Ives, a knock doesn't happen. So if you want to be calm, cool, and collected and look at 217.02 as the low of the move as a potential support point, then go right ahead. We're 14 points away from a gap fill at 236. If you want to throw that, I don't know if you want to try and wiggle out of something at the mark. I don't know if you're going to get that opportunity today. Let's Apple. It's worst 2 day sell off since '08. And boy, they're really caught in the crosshair. I've slashed the price target on that as well. Um, what
He did.
did uh,
He
what
came
did
out
he
with a
cut it?
huge price target slash. Let's see if I can find that note. I didn't have it ready here. I don't have it in front of me, but he did. He
Okay.
came out and again, it's all the uncertainty that we've been talking about for a long time. One thing, sometimes we get stuff right, sometimes we get stuff wrong. I think I was dead right on Tesla all year. To be bullish when I was, to sell when I did, because I could see the brand damage happening. Now people are chasing that story. At a certain point in time, this has been my best stock, folks. I'm going to tell you right now, it's my best stock for 2 years. Trading, I've been all over it. I do a lot of stuff really bad. I make some bad calls. I make some good calls. I've been all over Tesla. I feel like I've got a really good feel for this stock. I think you have the potential. The 217, 220 area is huge that we're coming into right now. That's a logical area for us to try a bounce here, but I'm still not like convicted in here enough to come in. I need more information. I think at a certain point in time, Tesla's going to be a buy. I do. I think Tesla's going to be a buy. I still think the humanoid army is coming. I think they're going to figure out FSD. I think all that stuff's going to happen. And this too shall pass. But at this point in time, Elon Musk is hated too much. The brand damage is unknown. And I think the sidelines is still the safest place to be with Tesla for now.
Yep, and then I think you have to add the same thing with Apple. I mean, you could have, I don't know that. What was it? Was it like Thursday? I think it was Thursday. I mean, they're just throwing in the towel here. I mean, I don't know. It was down. What did it do? Here, that's a 15-minute chart. I mean, you could do. There's a daily. I mean, at 220, and now we're traded at 181. Dennis, how low did you see? You saw some craziness last night.
Insane moves. Just insane moves. And I want to just go through some of these last night, like Robinhood /IB Trader Workstation or TOS and all of them. There were some insane moves last night. Like some stocks were down 5, 6, 10%, and then other stocks were not down that much. But, like for instance, Coke was trading down $5 last night. In what world does Coke have any business to be trading down $5? In what world? It's only down 2 now. Burke has come in a lot. Burke has been all over the place Burke was down to 490, 463 last night. It was down 30 points. Then it was only down 5 points at one point in time. Now it's down 20 again. What is interesting, though, even not just recapping last night's action, but recapping the action from this morning, is the weakness we are starting to see form in consumer staples. Consumer staples were the place of hiding 2 days ago. I don't know where to be. I'm just going to move all my money in staples. Friday, the Staples rug pull, the continuation with that this morning. Staples got hammered on Friday. If you were hiding out, and it not only Staples, AT&T and Verizon, look at the AT&T chart from Friday. You're like, I'm safe in AT&T. I'm safe in Verizon. You want to know something? When the bears really start running out of their caves and start biting and eating and they're hungry out of hibernation, they eat everything. They eat everything. So they're in their caves through the winter. You know, we've been in the winter. The bears have been in the winter caves, it seems like, for years. But they're out of the caves now. They start eating the easy stuff, you know, the high growth beta names, you know, they're going to eat all those. But when they really get hungry, they start eating everything. On Friday, they started eating Verizon. They started eating AT&T. They started eating the staples. They started eating, you know, like even, you know, Costco, which has held up well. It got hammered on Friday. The utility stocks got hammered on Friday. We're hideout in utilities. Oh, yeah. We've got a full-on tariff war and the markets are crashing, but let's go buy our utility stocks, folks, because we know we're safe there. Uh-oh! Rug pull! 79 to 74 on the XLU. 79 to 74 in one day. A stock is a stock is a stock when the VIX starts going over 40, 50, 60. They just start selling everything across the board because people are getting margin calls and they got to start raising money. And they start selling their winners to finance their losers. We've seen this from time and time again. I love trading bear markets because all this shit is predictable.
And like I'm just looking at some of these charts, like Procter and Gamble. Boom! Look at that bar on Friday. Johnson and Johnson. Well, that's had its own problems and going. Do we
Yeah.
got a positive headline coming out here, Dennis? Watch your offers,
Stop.
Dennis. Watch out! You're gonna
All
get
right.
picked off here.
Okay. I'm out. Cancel
What's
all.
going on?
Cancel all is the best thing. When you're trading, get that cancel all button. Don't be afraid to use that puppy.
We're ripping. We are. There's something that just came out here. 829. Folks. We are ripping. Let me see. I don't think there was couldn't be an 830 number at 829. Man, we are just clipping the handles here. Boy, I wish the Brentster was here. He'd be digging through this and
But remember, like, you
getting
know,
a
we're going to be
headline.
choppy. We're going to have headlines. Fade trade has continued to work here too. So don't forget, like, yeah, don't just start chasing stuff, you know, every single move
No.
here. You're chasing in this environment, you're getting hurt. Like I'm looking when rally, sell a little bit. When you sell, buy a little bit. I'm still sitting here buying dips and selling rips all day long. And I mean, my long-term portfolio is getting crushed with the rest of you. You know, I think it was down 3% on Friday. You know, like the long-term portfolio, the long-term investment, which is long and it owns all those stocks like Amazon and stuff, are getting crushed. My short-term trading account is having its best couple of days of the year. So
I've
Thursday is
had
my
to
best day.
have a
Friday.
closed door meeting, Dennis. You want your headline?
No, that was a while ago. That was
That
a,
was
Sarah gave us that about 25 minutes ago. So maybe it's just
really.
making its rounds now. She did. Look at the chat. Sarah's awesome. She's in her STN room as well.
Oh, she's in the STN room? I
Yeah,
did
she
not
is. I
I
believe.
did
Yeah,
not
she
see
is.
her. I did not see that.
Yeah, she's been rocking. She gave us that headline a while ago.
At what time? I'm looking
It was.
here.
I saw it in there, so it's been a little bit. Sarah, if you're in the PMP room, retweet or you gave us that headline about 20 minutes ago. That was going on. Maybe it's just getting around now more, you know, but it was out there. But we're rallying hard. We're gonna be like this, folks. Expect it. Expect it. Expect wicked whipsaws continuously. That's what we've signed up for here. It's going to continue for a long, long time.
Are we going green today?
Maybe. It's not out of the realm of possibility. I am not short this market. I'm not sitting
Oh
here
no,
making
no.
money on the short stuff.
I
I've
mean,
been trying to just buy dips and sell rips. I'm like moving. And when I get a little bit too short, I'm like cover. When I get a little bit too long, sell. I'm trying to stay market neutral.
I just wonder, and I don't want to make a statement that is not going to hold it, but I think maybe some of those prices that you saw last night in some of these stocks, I don't know if you'll ever see them again.
You
I don't
just
know.
got done telling me we're going to 3,000, Joel. You're all over the place too. And now we're not going to even see the lows again. We're going to
no
be all over the
stocks.
place for a while here. But
Good
there is
point.
don't kid yourself. If he starts talking about deals, you better be covering those shorts really fast because that can be a spark here. I am not in the camp of like we're down going to fall another 20%. I am not in that camp. I think there will be deals here that are going to go the other way.
Okay. Okay. Yeah. Well, short-lived. I don't know. So we maybe that just made the rounds again.
Like,
Or
remember when I was so convicted, Joel, during COVID? You guys, if you were listening to this show, remember we were predicting it, like replaying, the recent bear markets. We were way early. In January, I had all these puts, and I'm like, this virus is
I
coming. This is
know.
January
I know.
2020. And I'm like coming on this show and saying, I am selling stocks. I've hedged my entire long-term portfolio. And I'm like, January comes, and then we're into the middle of February, and I'm like, these puts, they all went worthless, and I had to roll them all to June, and then they paid me in March. We had the fall eventually in March. I was like, this is coming, this is coming, this is coming, and it's going to hit. I'm not like that right now. I am not even that bearish here right now, believe it or not. I mean, I know, oh my gosh, we're in a bear market. The media is talking about it, they're flashing, what a tear. We're just going to continue to fall forever. This is all just one, in the snap of a finger, it's a few deals, and a lot of this can go away. This isn't like, how do we get out of this crisis? It's simple. Just take some of the tariffs off the table, and we're out of the crisis. This, as simply as this crisis happened, it can be undone very quickly too. And I think pressure inside the administration is going to do that. That's why I'm with Dan Ives all the way. He thinks the same thing. He's like, if they tariffs stick, we're going a lot lower, but he didn't think they're going to stick, so he kept his overweights on everything. I'm with you, Dan. I'm with you.
Okay. All right. We've opined here for a good 33 minutes, and we got a new guest to come on the show here. So let's see what's going on in AI land here.
Joel, mute. Joel.
Oh.
Twice already this morning.
Good morning, guys. How are you?
It's Big Beat. Big Beat.
What's going on, guys? Listen, on Friday, we call it, when I was working in the White House, we called it Friday is taking out the trash. You put all the bad news out on Friday because you have all weekend and nobody cares. It's sports. It's everything else going on, the weather. Nobody cares. They're drinking a beer. And here we go. We saw it over the weekend, right? Where Trump just was like, I don't care. I'm going to play golf, and we got to take our medicine and our lumps. And this is how we're going to do the tariffs, right? Look, you were right. I listened to you, Dennis, earlier talking about COVID. You and I were dead right on this, right? We know that the biggest rips happen in the bad markets. We know that, right? Biggest rips in the markets happen because everybody's short and you got to cover them to get nervous. So, yeah, here we are. And thanks for having me on the show today.
Yeah.
So,
yeah.
Go ahead, Joel.
Well, first I want to ask you about Quasar Markets.
Yeah.
And what you're doing over there, and talk about the AI revolution.
Yeah, thanks for asking, Joel. I've been talking about AI for 15 years. I'm a speaker at World Economic Forum in Davos. I've been a speaker in Tokyo not too long ago about AI. The truth of the matter is for the last, I don't know, maybe 20 years, we've been talking about artificial intelligence is nothing new, right? It's been around for 50 years. What it means is that it's the next level of intelligence, right? But what we kind of consume is the sentient side of things, right? When it becomes aware, or when we can put data into the machine, whether that's ChatGPT, Anthropic, Gemini, and does it give me back better data and better answers to the questions I didn't even know to ask? And that's what I wanted to build. I wanted to build an AI machine on top of everything else that I was building that gave me better answers to better questions. Why is the person in Japan chewing bubble gum? How will that affect Microsoft stock in Arizona, right? And putting that together. And a good example of that would be I saw weather patterns off the coast of the Ivory Coast, and cocoa prices went through the roof, right? And we saw that there were some geopolitical issues also in the Ivory Coast, and cocoa prices went from 8,000 to over 15,000 in less than a month. I made pretty good money on that. And then I saw the weather patterns going away through the AI. And then, of course, the price came back down. But I wanted to put all of that together with not just me asking a question, but also adding things like Google Trends and stock twits and all the things that are being talked about on TV. If I could shove all of that into an AI and get a better answer, that's what I wanted. So we took all these different data pieces. I have a little over 300 to 400 data pieces that are going into the AI. And then to make it also compliant, so that instead of me going, okay, well, is it making a question up, or is it making an answer up, hallucinating as we know it to be doing, attaching the actual question to the actual databases. So instead of it hallucinating outside of Edgar, ask the question of Edgar. If I want to know a 10K question, or I want to know things like that, I can ask it. If I want to know what's going on in the world of stock twits or the world of Google Trends, I can just ask the actual database and not get out of that database.
Holy, lots to think about there. So how take all this information right now, throw it all into like your formula, into your system here, and tell us what to do here, because this market is so volatile. Like, how do you approach, markets, and obviously, how to use AI to better approach, trading these markets?
Yeah, I mean, you know what, Dennis? I think you and Joel have been doing this for so long, and sometimes we are, and for me, it's 34 years this year. We are so entrenched in the markets that we see it one way sometimes, right? We see it the way because we saw it. This reminds me of an XYZ time that we were trading, right?
Sure.
That's that history that the three of us have, right? But what I wanted to know is there a time that's like this time in the world? And the answer was no. There's never been a time.
No, not at all.
But it did say, if you remember the 70s, we had high inflation, we had oil issues where oil prices were going up. Well, we don't know, oil prices are going down, right? Okay. The 40s oil prices went down before World War II. So if we put the two of those together, what would those timing give me? Also, we found out that in the 1880s, we had an issue just like this. So that's what I wanted to know. I want to know, is there a time like this? Because why? The markets is our psychology. The markets aren't, you can take your charts and throw them away. As I've been saying lately, if you've been pearl clutching your charts lately, they're probably not working too well for you when the president's tweeting, right? I mean, we know that. But we know that when the president slows that down, that your charts become very prevalent. We need to know where that liquidity is, right? So that's why we're using the charts. But right now, if you look at both sides of this, you're finding out that we have a combination of the 1880s, the 1970s, the 1940s. You put all that together, what it's saying is, yes, we're going to have some issues. And what I did was I also stuck in today, I added a little bit of data to it, which was Jamie Dimon's letter to the shareholders. And what Jamie Dimon was saying, he said three things. And he said, the private sector cannot afford to sit on the sidelines. He says, our future depends on a stable, free, and rules-based global system. Well, right now, they're all sitting on the sidelines. The private markets are they're not getting engaged right now. They all went to the White House, back a few months ago, and sat down with the president, and the president still wouldn't do the tariffs. He said, I don't care. And he says that we're also in an economic war as much as a military one. Well, those two things are really bothersome to the average American, right? But I don't think that they're actually going out, and I don't think they're actually selling. I think there's a lot of this is, we saw this, zero DTEs, as I call them, death contracts, are really skewing the market. So I'm not too concerned about this. In fact, I bought pretty heavily in the overnight, and I also bought pretty heavily in crypto, Bitcoin, on Sunday night, last night, 77.3, which is where we're about right now. I bought very, very heavily on Bitcoin. So I'm not scared about this. I don't know that China is going to go, oh, he's going to throw their hands up. The words I've been hearing lately is that China is going to bend the knee. That's absolutely nonsense because they're not going to bend the knee to us.
Yeah.
But Japan is. Vietnam will. They'll say, okay, we have a huge trade deficit with you. We get it. Japan, not so much. But Vietnam, I mean, without Vietnam, we don't have Apple products. Without Vietnam, we don't have Nike shoes, right? We've got to have those things to make our U.S. companies. And you also saw where several U.S. senators who also produce and manufacture foreign goods in our country, like in Toyota in Kentucky and oil in Alaska, we export. Lisa Murkowski and Rand Paul actually went against the president, right? So there's not this consumer aspect of, okay, well, because I'm a foreign country and a foreign product, we can't have it. We are addicted, as I said on Friday on my own show, we're addicted to two things. Flat screen TVs, big screen TVs, and we're addicted to bad politicians. So that combination is really hurting us right now, right? So we're seeing that, and that's why I'm not too worried about it. I think the thing will eventually, I think you said it best. You weren't sure about your puts, right? During COVID, I'm not too concerned. I'm buying for longer term. I'm just changing out. My charts don't look the same as they did 3 months ago. And if your charts look the same as 3 months ago, using the same indicators, then you're not doing it right, especially not in this. So that's one thing that also my AI was like saying, hey, you know what? You should be using Elder's Force and Donchian channel as well, because they also use volume, right, as a protection. So yeah, I mean, but I'm not scared of this market.
But big beat. So it sounds to me like you're doing some nibbling here, and you think like I'm of this opinion too, that I've nibbled in a little bit. I bought 4 little stocks on Friday, which are down a lot more today. But I've been just nibbling a little bit because I had 35% cash in my long-term portfolio. I want to put some of that to work. But I think, like what I was saying before you came on, is I think this administration, there's already cracks forming here. I don't think we're going to see these tariffs go into place for the next 4 years. I think we're going to see a lighter version of it. Maybe a significantly lighter.
Yeah,
you're with that?
Yeah, look, we know that the president's told us that several times, right? He's told us in the last administration he didn't get to do it because of COVID, and he's telling you again during the campaign. The problem that I have with it is this sledgehammer politics, right? It's like, oh, well, I'm not going to just raise your tariffs by 20%. Now, I'll tell you one thing. When he first came out, before he showed the silly board, he said, we're going to make reciprocal tariffs. We're going to, if you tariff us by 10%, we'll tariff you by 10%. The markets exploded over that. They're like, okay, that's okay. I'm okay with that myself. I believe free trade. I'm a capitalist. You make a good product, I'll buy your product. You make a terrible product, I don't want it. Right. But what he was saying was, no, we're going to now charge Vietnam, 54% tariffs. Wait a minute. That's not even keel here. So that changed it, and of course the market sold off almost immediately. Yeah, no, I don't like the sledgehammer politics. Scott Bessent and Howard Lutnick are no joke. They're really smart people. They're in the administration. These are people that are in, and as we just talked about with Jamie Dimon saying, we need to have that combination, right, of inside the private sector as well as in the government sector. And I think that we're going to be okay. And I think what Peter Navarro said too the other day, cooler heads are going to prevail. They're going to come together, and eventually it's all going to work out. And we'll be like, this was a blip. But this is not a blip to my parents. It's not a blip to the people that are living on Social Security when the Doge is going into Social Security and talking about really 11,000 employees going away in the IRS. There's still a little bit of an issue there. And we still have Ukraine. We still have China. We still have Taiwan. We still have Europe fragmented. There's still a lot of issues that people are worried about. I've said it all along. If any good news comes into it, I think you said too, Dennis, if any good news comes into this market, kaboom, we're going to see a market go right back up and be like, okay, things are going to be okay. Ukraine's solving itself. Okay. But we haven't seen that yet. And I think that's what's bothering people right now. But the best part of it is we're going into spring and we're going into summer, and that's when trading slows down. And I think we're going to start seeing some cooler heads, as Peter Navarro, our USTR, said on Thursday.
Okay, so we gotta, we have all these things going on geopolitically. We still have a couple wars going on that were supposed to be over, but we're going into earnings season.
Yeah.
Well, shouldn't that be fun?
No, you know what, Joel? It's a great question. If 87% of earnings that came out for Q4 beat. That's a high number. 87% for Q4 earnings beat. As a big beat, right? What was the problem? The problem was guidance. The guidance was all bad. Well, we didn't know. They didn't understand. The new president with new policies. We don't know what's going to happen. A lot of them already knew what was going to happen. I mean, you look at Marjorie Taylor Greene, who went to all cash, and she knew what was going on. You talk about it from the perspective of Warren Buffett. He knew what was going on. He went to cash and raised $334 billion in cash, the biggest cash pile he's ever had. So guidance told you everything you needed to know. You saw Nike saying, you know what, we're going to have some issues here. You saw Apple saying, well, that's where we produce our goods, right? You saw a lot of car manufacturers going, well, I don't know, right? GM and Ford said the same thing. We're not sure. So guidance became a big factor in all of that. And so because of that, I think, that's what's put the beginning damper on things. And I think that the administration said, look, we've only got a good 2 years to get this done. We didn't do it last time, so we're going to get it done now.
Okay, so we got that. Give us, how many stocks on your screen are green?
None. Look, I mean, I got a few biotechs, as you know, I'm a biotech trader, but I'll tell you one thing. I think Dennis said, he's nibbling. Look, if you really liked NVIDIA at 140, you sure as hell like it at under 90, right?
Yeah.
If
Yeah.
you like Disney
Yeah.
at $100, and I always tell people buy Disney under 100, you're really liking it now, right? If you liked Apple back at over 200, you're loving it now, right?
Yeah.
You're seeing the multiples of these companies completely erode over the last 3 months. Great. And you know what? They're not stopping producing. They're not stopping creating. And one of the things I've always said is in bull markets, it's always tech that leads. So I'm saying again, if you want to, you need to get tech. And I think one of the things that's been beaten up the most because of the tariff issue has been the semiconductor area, right? TSM. Taiwan Semi said, you know what? Let's cut a deal. I don't even need the president. I don't even need our country. Let's just cut a deal. We'll produce our stuff over in the United States. Great. And we'll solve our tariff issue. So we're already seeing the private sector already working on those issues. So I think it's going to be the semiconductors. Look, I can't wait to get a new NVIDIA chipset, but it's too damn expensive, right? Look at Nintendo putting out a new Switch too, coming out. You think that these game makers are slowing down? They're making games. We saw that during bad times is when you should be making technology, and you saw that's when the iPad was built out of the 2008 sell-off. We saw a lot of technology coming out of the big housing market crash, right? Lots of technology. So I think that's one of the bigger areas we need to be working on. And I tell you, it's always the ones that have subscription-based services that are lowering it. One thing you keep hearing from the general public is we want more and we want to pay less. So companies like Netflix are producing more, and they're going after international movies to put into their system. So those kind of things also I'm looking at too. If you have international growth that's not dealing with Ukraine and not dealing with Taiwan and not having to deal with LATAM, things that are like, right in the between the two that aren't having issues. So like, Sweden has a ton of movies. It's one of the biggest movie producers in Europe, and Netflix took advantage of that.
All right, Big Beat. I do have a stock that's green, and it's Dollar Tree. It's up 94 cents. Steven or Big Beat Quasar Markets joining us here on Pre-Market Prep. Steven, looking forward to following your analysis. All right. That
Thanks
rally,
so much,
that rally goes kaplooey. Kaplooey, Dennis. Right there. And that stuff about the Fed meeting, they have a closed door meeting like every Monday or something.
Yeah.
So,
So people start spreading it around, and that's why I said Sarah said that like 25 minutes ago, and the market wasn't rallying on it. Maybe it grabbed somebody, and maybe somebody set it on major media or something and popped it off. I did just popping it. This is just insane. This market is insane, folks.
Oh man, we just popped. Oh boy,
we just popped 20. Like 20, 30 hand. No more. We just popped again. This is where we're at. We just popped like 40 handles right there in about 4 seconds. It's going to be continuous macro-driven headlines. Get used to it. Get used to it. I mean, you can get out though. Like in these pops and drops, you can get out, but don't get run over by the big one. The big ones we're looking for is potential for deals or potential for more retaliatory tariffs. Retaliatory tariffs are going to bring us down. Potential for deals are going to be up. There's always another headline too, but those are the two that are on my radar here right now. So those are the two that'll really move. But look at the chop. Look at what we just did. We just rallied 40 handles, and we just gave back 20. In like that sentence, when what I just was speaking in the last minute. It's incredible.
Yeah, one thing too is like I hope I've been consistent with this is like I like to see things calm down, and I would be happy. I mean, we don't have to go fill the gap today, but if we just settled right here at 5,000, nice round number in the S&P. I mean, that low right now, that 48.32, man, that happened so quickly. Here's a 15-minute bracket. Let's see if it was even 10-minute. That was a 10-minute move off the 6 p.m. open. 10 minutes. It was even quicker? I don't think so. Let's go 5. No, it took 10 minutes. That was a 10-minute move. So where if you want to deploy money today, where do you go? Do you go to something that's actually green like Dollar Tree? I mean, traded up 94 cents, big move yesterday. Or do you try and go to some of this tech here? I mean, the moves. Dennis, have you looked at the change in the PEs on some of this stuff? I
Yeah, no,
mean,
they're coming in. They're coming in at levels that haven't been in years. Some of them haven't been there years. I mean, Amazon. Can you buy some Amazon at 168 or 165 or 161 last night? I think you can nibble. I think if you're a trader, you have to be very cautious, though. I think if you're trading, you're not like just randomly buying dips. But I think if you have a long-term investment account, you have a time horizon of 5 years, this too shall pass. I'm not in the camp the end of the world is here. The end of the world, everybody always predicts it, and it never comes. So
I
I'm
will
slowly
say,
adding to some stocks in
I,
my
I, I,
long-term portfolio. I'm
I
slowly
will
adding.
say, I have a new indicator.
Hmm.
It's the going out for breakfast on Sunday indicator. We hit
Okay.
the pool, then we hit Costco. Costco was busy. Okay. Then we wanted to go
Cost.
to breakfast. We go to our favorite breakfast place. The line was out the door. We couldn't even go there, and we had to go another place. So if people are still going out now, paying a lot for the breakfast, of course, but hopefully that will come down. But the going out to breakfast recession indicator is still saying we're not in a recession yet. So there
And
you
it could
go.
be coming, and it could get a lot worse. Lots of things can happen. So know your time horizon. I have no swing longs on, zero. Day trading longs are all hedged, so I'm not long the overall market. Am I long the overall market in my long-term account? Yes. Will I continue to buy and dollar cost average into really good companies on my long-term account? Yes. I'm not going to stop at one of the when we're literally coming down to 3, 4, 5 year lows on some stocks. Some stocks only at like 1 year lows. Lots of stocks way lower than that. Am I buying Palantir? No, the valuation never made any sense. But am I buying, I can't even remember. STN Room would know what I was buying. I bought a little bit of Micron, just nibbling in. I mean, the
Oh, that
stock's coming from
micro.
$100 to $64 in a week. I mean, it's off 33% in a week. I nibbled a little bit. Not as a trade. Could go lower. Could go to 55. Could go to 50. But, I buy a quarter of the position, almost like Jim Cramer style. Buy a little bit. Buy a little bit, nibbling, because I don't know if there's going to be a headline coming today that, hey, we got a deal over here with Vietnam, or we got a deal, we're talking with Xi and talks went good, or we got this. I don't know when that headline's coming, but I don't want to miss this altogether because I'm not of the opinion that if I was of the opinion that the tariffs are permanent and they're going to be here for 4 years, which was Trump was saying, I would not be buying any stocks anymore. I'd sell my entire stock portfolio. I am not doing that because I don't think that's what's going to happen here. I think there's still a Trump put here somewhere. I think the administration is going to put that pressure on. That's just my opinion, folks, and people are getting angry. When people lose money, people get angry. There's people mad at me
Oh,
in the
yeah.
chat. They're saying, oh, Dennis, you're wrong here, you're wrong there. People want to be bearish, they want to be bullish. All I'm saying is in my long-term account, I've always stuck to the same strategy. Buy good companies at reasonable valuations. That's all I have done in that long-term account since I created it back in 1997. I'm going to continue to do that. And these opportunities are there. So am I going all in here? No. Would I nibble into some stocks? Sure.
I would love to see Warren buy something.
It's going to happen, folks. He's going to come in, and that's going to help too. I'm telling you, he's licking his chops. He's going to keep an eye on your SEC filings because he's going to be buying something soon. Is he going to buy more Oxy? Maybe, but I think we need something better than that. We need like a couple new buys. But the problem is that he could be buying right now, and we don't start getting disclosures until he's over 10%. So he could be actually buying
Oh,
some
yeah.
stocks
Yeah.
right now,
Yeah.
but we don't find out until we get the 13, the 13 F Friday or Monday or whenever they come out. And that's every 45 days. If Brentster was here, he could tell us the next time they're coming out. Maybe somebody in the chat knows. So we may not know right away, even if Warren Buffett is buying, unless he says something to somebody in the media. So
Well, you
I
know
would
what?
imagine
Also,
that Warren Buffett,
yeah.
I honestly think he's probably doing some nibbling in here too. I do believe that Warren Buffett is probably doing a little bit of nibbling. I hope
And
it's not a more Siri, like
um,
serious. He's had some bad picks lately, folks.
I think also too. I think he's like kind of caught on to this whole 13F thing, and so he's keeping it under that 10%, right, and buying more things because I don't think he likes when when that stuff comes out and it has immediate pops like that. So yep, we're ripping again, Dennis. Watch those offers once again here.
Again, sometimes you don't want to watch those offers because you get done and then it pulls back in and then you recover. When you're chopping around like this, you almost, when you want to get down on the rips, you want to be buying on the dips. I mean, in this show, we've rallied 1%, sold off 1%. Like, just bring up the intraday chart here, blow it up a little bit. We were just chopping around on SPY. Huge chopping around.
Yeah, look
Chop,
at this
chop,
shit.
chop.
Yeah,
Chop.
that's a trade. We're at a trading range, folks. Since we're in a trading range. Since 8 o'clock. I'll just give you the trading range here. The low of the trading range is 49.58. And the top of the trading range was just hit 50.28. So there you go. And if you guys want to follow more of the price action, you can join us in the STN room starting at 9 o'clock. And there should be some imbalances out there to trade. Dennis,
There's
huh? Don't you?
always stuff to trade. There's always
Yeah.
stuff to trade. And again, if you're just getting crushed and you're trading, again, I've told you, everybody on this show for a long time, if you want to be a professional trader, you have got to trade both sides of the market. You've got to trade both sides of the market. You can't just be, if you're a swing trader, long-term investor has no reason to be short in your long-term accounts, because you know what? The market drifts up over time. There's lots of reasons to be short in your trading accounts, though. All kinds of reasons. There's certain times you're going to be short, certain times you're going to be neutral, certain times you're going to be long. I think we're in a more neutral camp here too, leaning a little bit long here today. I've been doing a little bit of buying and leaning a little bit, but there's going to be so many opportunities. There's so much great trading here right now. So in the last 3 days, I just want to let you guys, trading, long-term investment account, going down with the rest of you. My trading account is all-time highs. My trading account is actually had its best week last week of the year. Because there's so many good opportunities. Inefficiencies. Like being able, just to take advantage of the little pricing inefficiencies, whether than the pre-market or at the open or at the close or after hours. There's all kinds of inefficiencies out there. Prices just going all over the place. Pairs blowing out different directions. People just panicking in the streets. I mean, there's lots of opportunities here.
Was this something you mentioned when we were on the phone last night? Something that you mentioned that was interesting. And because you trade a hedge, long and short, but you were able to sell some stuff only because you were long.
What's
right?
a tick? So sometimes, folks, and we've been talking about this in the STM room, the alternative uptick rule, and you get people like Jim Cramer who says we need to reinstate the uptick rule. Show us how much Jim Cramer has no idea what he's talking about. They reinstated the uptick rule in 2000, after the financial crisis. I believe it was 2010. It came out with the alternative uptick rule, and all of these stocks are under the alternative uptick rule. A lot of them are. If a stock falls 10% one day, it becomes under the alternative uptick rule for the remainder of that day and the next day. So lots of stocks cannot be shorted by hitting the bid right now. So sometimes you get opportunities where you're long a stock pops up, and nobody can hit it except a natural long. So everybody's trying to short it, but if you're long the stock, you can just sell it, and it's basically free money. So, well, not free money, but it's money that's like we saw in an Oxy last night, or on Friday night, I believe it was, or Thursday night.
Oh,
Oxy
that
also got
45
bid up a
bid.
buck and a half after hours.
Oh my
It's just
gosh.
somebody, it was like 40,000 shares. Somebody's out to lunch. There's like a bazillion people trying to short it. I was like, if anybody's long Oxy, it's a good sell right now because it's at 45 and it's going to go right back to 44. It's going, and then, went 45 and back to 44, like 10 seconds. But only natural long. So what the alternative uptick rule does is it creates little market inefficiencies. Sometimes you can take advantage of that stuff. If you're long the stock, a lot of times you can't. But again, there's just understanding the plumbing of the markets is my specialty. Taking advantage of the plumbing is the high frequency trader's specialty, but understanding it, and I can, have some edges from it too, is information that, if you're a professional trader, you absolutely need to understand.
One more quick thing. I had CC Legator on Friday afternoon. And, one thing, he was talking about, he talked about how to do some potential repairs and stuff. But one thing that he was really firm about was, it's going to be the VIX. It's going to be like this for a while, folks. So, there's going to be no immediate resolutions, but, eventually, eventually things will calm down. Okay, we're going to wrap it up here, 9 a.m. We're going to have the cow guy on tomorrow. Scott Shalady will be
Nice.
joining us. In the STN room, we're going to talk fundamentals with David Traynor of New Constructs. Coming up the earnings season, he has some things on his radar. And then we're starting today for the first time at 2 p.m. on the Stock Trader Network. Christian's Corner. We all love Christian, his calm, cool, collected input. He'll be joining us. It'll be me and him at 2 p.m. And then, of course, we'll be back at 3:30 to trade the close. So, folks, appreciate your participation. And day by day, we'll see you in the Stock Trader Network.